Hi, I'm Roger Montgomery from Montgomery Investment Management, and welcome to this week's Video Insight. Equity markets are hyper volatile at the moment, and September was a particularly challenging month. The S&P ASX 200 declined 7.5%, the S&P 500 fell 9.34%, and the tech-laden Nasdaq gave up 10.5%. Even government bond investors were unable to escape the sell-off. The S&P ASX Australian Government Bond Index lost 1.74%, and the S&P US Aggregate Bond Index declined almost 4%. It might seem everyone lost money in September, but they didn't. Investors in credit income funds, like the wholesale client-only or a high-yield SME fund, which is available through Montgomery, generated positive monthly income and enjoyed a stable unit price. The reason for the very different returns is the fund doesn't invest in equities or bonds. Instead, it undertakes an activity that's been conducted for thousands of years. Or high-yield SME fund investors lend relatively small amounts of money for short periods of time to Australian SMEs. And they do this through a carefully selected panel of lenders or originators. They're the businesses assessing the applications and providing the financing. Now, if you're even remotely conservative like me, you might recoil at the concept of lending to small and medium businesses. Mind you, you probably also recoiled at September's equity and bond market returns. It just sounds risky, doesn't it? But keep in mind, lending to SMEs is what banks have been doing with your money for eons. More recently, however, the banks have pulled out because it's become too capital and labour intensive for them. But small and medium businesses still want to grow and still need financing. And so a structural opportunity has emerged for non-bank lenders to fill the gap. So what kind of small and medium businesses borrow from lenders selected by Brett Craig and his team at Aura Credit Holdings? Well, think of a farmer with a large crop of wheat or canola or sorghum to get off. Unfortunately, the head is broken down and they need $100,000 to fix it, and quickly. Because the crop is going to be soon harvested, the farmer might only need the money for a month or two. If he or she went to a bank, however, it might take them 6 weeks and a mountain of paperwork to obtain the financing. With non-bank lenders, the funding can be provided in a couple of days. And the farmer doesn't mind paying a higher rate of interest because the borrowing is only for a short period and the crop is worth much, much more. For example, if they borrow $100,000 to fix the header at 12% per annum and they only borrow for 3 months, the interest cost is just $3,000. Meanwhile, the lender mitigates risk by taking security over the header, over the crop, and even the farm. The famous 1926 book, The Richest Man in Babylon, about frugality and enterprise, a book that continues to inspire people to become better financial managers today, contains sound advice for lending. Let me quote, "The safest loans are to those whose possessions are of more value than the one they desire." And elsewhere in the book it advises, before you lend, assure yourself of the borrower's ability to pay and their reputation for doing so. With security over the farm, the header and the crop, the value of which is far greater than the loan, and with revenue from the crop only a few weeks away, the lender is assured of our hypothetical farmer's ability to pay and of the value of the possessions being higher than the cost to fix the header. Nothing is guaranteed, of course, and there are always risks. Importantly, Brett Craig has been assessing those risks carefully for more than 5 years, producing monthly income, a return of more than 9.5% per annum, and no negative months to investors. And the lenders selected by Brett and his team have their own capital on the line, ensuring any losses from defaults are first borne by their returns. If defaults grow and their returns are completely eroded, it is then their capital on the line next, and before investors in the high-yield SME fund are exposed. With Brett, we've just completed a round of dinners through the major capitals, speaking to investors about his management of the Aura High Yield SME Fund, explaining the structure and risks and inviting investors to consider whether the opportunity is right for them and to speak to their advisor. We don't have the results for September just yet, but August generated an income return of 0.67% And for the year to the end of August, the income return was 8.32%. The September numbers should be out soon, so keep an eye out here on the blog for those September return updates. Most equity investors invest for growth, provided by growing businesses, and they also invest in cash, bonds or hybrids, looking for monthly income and returns that are uncorrelated with their equity and other assets. The Aura High Yield SME Fund is for wholesale and sophisticated investors only, and the Aura Core Income Fund is for retail investors with $25,000 or more to invest. If you'd like to find out more or would like to invest, remember it is essential you speak with your advisor and seek personal professional advice about whether the Aura High Yield SME Fund or the Aura Core Income Fund is right for you. Alternatively, give Toby Roberts, David Buckland or myself a call here at Montgomery and we'd be happy to answer all of your questions. We look forward to talking to you again soon. In the meantime, follow us on Facebook and Twitter.